Well, good morning. I want to thank you all for coming. I particularly want to thank my directors for coming. And there's a reason behind that. We're doing photographs before the meeting, and we got a memo yesterday from Liz Nemofsky, our marketing manager and shareholder relations, saying directors will be shot before the AGM. And I said, maybe we could reword that. So I admire our director's courage in coming, and again, welcome. Typically, what we try to do in these meetings, in our AGMs, is go through the stuff first. That is what we have to do to legitimize an annual meeting, et cetera. Get that done, get it finished, get it out of the way, and then get on to the more substantive discussions and questions after that. So if that's all right with you folks, we'll follow that same pattern. So the meeting come to order, those of you who haven't been to order so far. Good morning, I'm Tom Caldwell, I'm President, CEO, et cetera, et cetera. I'd like to introduce our directors this morning. Beth Cawley, a member of our board. George Elliott, Michael Gundy, Charlie Pennick, and Brendan Caldwell, who's the CEO of Caldwell Investment Management, whose superlative team, guide, and of which I'm a part, guide Urbana Corporation. So I'm just part of. People always ask me that when I see them these days. Well, what kind of team do you work with? Because they're looking at my white hair and thinking you're going to be dead in the next day and a half, and we want to know there's a backup plan. We have a really good team in our company, and I'm grateful for that. I'm going to abide as chair. Harry Liu. Where's Harry Liu will act as secretary of the corporation, and I'll ask Radha Mulchan Singh, representative of CST Trust, to be the registrar transfer agent of the corporation and to act as our scrutineer. Notice calling the meeting and the company management information circular, financial statements for the year, December 31st, 2016. The auditor's report have been duly mailed to all the shareholders of the corporation entitled to receive notice, which includes both the common and the non-voting A shares. Additional copies of these materials are available at the meeting, so if you don't have them, you can get them at the back. The form of proxy has also been sent to common shareholders who are entitled to vote at the meeting, and with the consent of the meeting, the reading of the notice of the meeting will be dispensed with. If no one has any strenuous objection to that, we'll just keep on moving. The Secretary of the meeting has filed with me proof of service of the notice of the meeting, management information circular, form of proxy, financial statement, and the auditor's report. And I direct the Secretary to annex the notice and proof of service to the minutes of this meeting. Prior to the meeting, the scrutineers reported on the common shareholders present, the number of proxies received for common shares, and possibly I could call on the Secretary to read that report.
I have read the scrutineers' report on attendance, which states that there are a total of 30 common shareholders present in person or represented by proxy, holding 6,023,000 common shares. This meets the quorum requirements of the corporation for the purpose of this meeting. That's actually 60.23% in terms of percentage.
Okay, I declare that with notice having been properly given in accordance with the Business Corporations Act of Ontario, the requisite quorum of shareholders being present, this meeting is properly constituted for the transaction of business. For each of the resolutions that follows, the only shareholders with common votes are entitled to vote. The rest of you can groan and grumble if you wish, and we'll take note of that as well. But the minutes of the previous shareholders meeting. The minutes of the shareholders meeting held on May the 11th, 2016 are available for inspection by all shareholders. If there's no objection, I will entertain a motion to approve those minutes.
I move that the minutes of the shareholders meeting held on May 11th, 2016 be approved.
Thank you, Mr. Gundy. Could I have a second? Vincent John, seconding at the back. All in favor signify by raising your right hand. I have to, it says here pause. Okay, this is the pause part. Contrary, if any. Pause. Carried unanimously. The first item of business to place before this meeting is the financial statements of the corporation for the year ended December 31st, 2016. These financial statements, together with the report of the auditor dated March 15th, 2017, have been duly mailed to all shareholders of the corporation. The report of the auditor to the shareholders is open for inspection at this meeting. Are there any questions on the report or the financial statements? Pause. Deal with questions. Great. The next item is the election of directors. I declare the meeting open for nomination for the directors of the corporation for the ensuing year or until their successors are elected or appointed. May I have a nominator, please?
I nominate Thomas S. Caldwell, Beth Ann Colley, George D. Elliott, Michael B.C. Gundy, and Charles A.V. Pennick, individually and not as a slate, for election as directors of the corporation.
Thank you. Any further nominations? I declare the nominations closed. May I have a motion to elect those nominated as directors of the corporation?
I move that each of the persons who have been nominated be elected director of the corporation for the ensuing year or until his or her successor is elected or appointed.
Okay, I need a seconder. Brendan Caldwell. All in favor? Contrary, if any? Carried. I declare that each of those nominated have been elected as a director of the corporation for the ensuing year or until his or her successor have been elected or appointed. The next item of business is the appointment of the auditor for the current year. May I now have a motion to appoint Deloitte LLP as the auditor of Urbana Corporation?
I move that Deloitte LLP be hereby appointed auditor of the corporation to hold office until the close of the next annual meeting of shareholders or until its successor is appointed at such remuneration as may be fixed by the directors, and the directors are authorized to fix such remuneration.
May I have a seconder, please? Mr. Andrews-Zoni, seconding. All those in favor? Contrary? Carried. Is there any further business to be brought before the meeting? Okay, if there's no further business, I will entertain a motion to conclude this portion of the meeting. May I have a motion to that effect?
I move the meeting be terminated.
Okay, Mr. Liu, second. Mr. Chris Goodere, all in favor? Carried. Contrary, if any? I declare the meeting terminated. Thank you. And good morning. I'm leaving. Okay, I snookered you on that one. Again, I hope you don't mind. We like to get that off the deck in case there's a riot. At least we finished the formal part of the meeting, sort of thing. So that's done. I'll do the first part of the review. Every year we have different components of our investment portfolio come and speak, the companies and the individuals. We've narrowed it to one this year because it's a little bit different format. So you're going to have to bear with me to do sort of a general review and then touching base on some of the companies that we've been involved in. And then we're going to go to a special presentation in this meeting with Matthew Stevens, who's our consulting geologist working on the urban township property. And we thought we'd focus on that this year because it's quite an interesting investment we have. I call that the lottery ticket component of our portfolio. Anyway, let me go through some of the year here for you at any rate, and I'll make this as brief as you can. During the early part of the year, we invested in what I call Canada Inc., and those holdings encompass the Canadian banks, energy, and mining companies. These positions worked extremely well for Urbana, with the standout being Tech Corporation, where we recorded gains of over 300%. It was a spectacular move, and ever reminding us in our industry, what would you rather be, good or lucky? We were good and lucky. So that's been a great position mover. We still maintain very heavy weightings in U.S. financials, primarily Bank of America, Citicorp, Morgan Stanley, Chicago Board Option Exchange. So a significant portion of our portfolio is in U.S. denominated securities. And our rationale for that in great measure was the onerous provisions of Dodd-Frank coming out of the financial crisis. We had felt eventually these will be watered down, eased, etc. And when Mr. Trump was elected, the market went into a complete bear market collapse for about an hour and a half. And then it just turned and went straight on up. And you heard this referred to as the Trump trade. And it was the perception that Mr. Trump is going to ease regulations, ease taxes, make it less of a burden on the financials. And that has actually worked. Also, Mr. Trump is, trying to put this nicely, a little bit of a bully. There's not much he can do with China and Russia right now, so let's go beat up in Canada, because that's an easy one to do. So I'm particularly concerned, and have been, about our dollar vis-a-vis the US dollar. And we've seen some pressure on that. So part of it was a dollar play, part of it was the Trump play, part of it was the regulation play, that kind of a thing. And that continued on into the first quarter of this year. Now, at some point in time, the guy's got to get some results. And otherwise, you know, the euphoria might wane a little bit. But we're still in those positions. We still think they're good positions to be in. Toward the end of the year, we did sell some of the Canadian bank holdings, Royal Bank, etc., and we bought Deutsche Bank. Deutsche Bank was being fined. Americans are particularly aggressive with foreign companies. You know, you remember the BP thing? They're people's parrots in Pittsburgh weren't speaking, and they were getting sued for that. They just hit you with everything they can possibly hit with. Well, Deutsche Bank was fined $14 billion for something in the mortgage markets, etc. And the challenge is, it's poor form for an American government to destroy a major financial institution in another country. So our view was, it ain't going to be $14 billion. Now, they did scale it back to $7 billion, was at least doable. It was sustainable. So it meant the company was going to stand. So we bought that, and because we were also looking at multiples of tangible asset value. And basically, Deutsche Bank was valued at about a third of what the Canadian banks were valued at. So we thought we'd have a little participation in Europe and see how that works. So that has actually worked out not too badly. And if you look at the papers today, that people are talking about shifting money to Europe, because the European economy seems to be doing fairly well. In some of our private holdings, we had an interesting year. We had a step up in Real Matters. That's the real estate appraisal company that we have a good investment in, right? A good size investment in right now. And so it had a bump up. It did a financing at 5 1/4. Now remember, they've consolidated that stock now 2 for 1. So that worked out quite well. Radar Capital, run by Mark Leroll, they oversee a lot of our private equity investments. And we had an improvement in one of the LPs with them. And that whole private equity sector has worked out reasonably well. The Bombay Stock Exchange moved up a little bit as well in anticipation of an IPO in the first quarter of this year. And also we saw some very interesting results coming out of our urban township gold prospect. So that worked out fairly well. Now, getting into the first quarter of this year, a few trades we did. Well, first off, we had the Bombay Stock Exchange do an IPO. It wasn't a big step up, but it added $4 or $5 million to our equity position, and it now is a publicly traded company. We are locked into our position till February of next year. But it was a very, very tough hold. I mean, the government of India, regulators changed the rules about 3 times. We had to go to India. Brendan was in India talking to regulators. I had to engage lawyers, public relations firm, badger, threaten, and cajole the management of the company, because once we all went in and bought these exchanges in India, and Soros, again, they got everybody, they changed the rules. They tantamount to nationalizing all the exchanges. So we had to really campaign and be activists to get it changed around. So the net result is, it's not going to be a big win, but even getting out with our tail feathers is looking like a good win to me now. We'll probably end up making money on India. India will probably be all right, but they have to control absolutely everything. Absolutely everything is under control. I was laughing when I was in India the last time. There was an article that they're going to give people tickets on the traffic circles for driving too slowly through the traffic circles, and it's slowing down traffic. So to make traffic go faster, they're going to give tickets to people who are driving slow. So that should really pick up the speed on traffic circles. And I must have read that 3 times. I still don't understand it. So, I mean, they really do have to control everything. And that really is a brake on that economy. But like it or not, this is a huge economy that's going to grow and grow. And you can feel the confidence in India as you go there, almost the chauvinism too. They're very proud of their country and where they're going and what they're doing. So it may well, I've said many times to our young brokers at Caldwell Securities, a lot of the money I've made in my life, I've made by accident. And this may end up being one of those cases. It seems to be picking up. So it's worked out well. The IPO has been really quite good. What we also did, our urban township property, now that's on our books at zero. It's a legacy position. Urban Quebec Mines was the company I originally took over. And I took it over because I had these gold claims with some good values. And we expanded it many times from 6 claims to 74 claims, now reclassified as 44 claims. What is it, about 3,000 acres roughly? Yeah, a bit more than 3,000 acres. And we held that on ice. We did that 15, 20 years ago. But what has happened in that area is Domtar started stripping the lumber out of it and now became accessible by lumber roads. That's assuming you don't get killed by these lumber trucks coming the other way with logs on them. And they're not the most careful drivers in the world. But we can get equipment onto the property. When we acquired it, we had to take a bulldozer apart, put it in pieces and fly it back and forth and to reassemble it. And then when we finished the work, just left the bulldozer. That will impress the environmentalists among you, I'm sure. But at any rate, everything was so expensive to do anything. And with this opening up, there's been some tremendous exploration plays developing there. Osisco, immediately north of our property, has done tremendous results, and we have all the companies around us. But Matthew's going to talk more about that. But what we did, the reason I just mentioned it, I bought pieces of those companies. They're more junior than we look at, but I think there's going to be a major mining camp developing in that area, like Timmins or Noranda maybe. So I wanted to own a piece of all these other companies around. I couldn't acquire more property, but I can acquire the companies that have the property. So that was a little bit of our liquid portfolio acquisition amount. In the Bombay, we did have to tender a little bit of stock, but it's all right. We still have a decent possession. The second liquidity event that we're going to have, it's not in the first quarter, but it is tomorrow, is Real Matters. And Real Matters is doing their IPO, tomorrow. And price is what, $13, Brendan?
$13 will be the IPO price after you have 1 or 2 consolidated.
Yeah, so the consolidating the stock 2 for 1, and that should work out reasonably well. Let me go back to my notes here. I want to do a brief rundown of our current portfolio and the items I might have missed. Last year was a good year. Our portfolio grew by 30.4%. That gave us a 3-year average of 17.5%, a 5-year average of 22.5%, and a 14-year average growth of 16.2% annually compounded, which beats the daylights out of any ETF on the landscape, and which, by the way, is double the rate of return of Berkshire Hathaway over the same period of time. So, but he's a lot richer than we are. But at any rate, I was thinking of an ad, Berkshire Hathaway, the gold standard, Urbana Corporation, the new gold standard. But I think regulators take an owner's view of that kind of thing. And the first quarter has been pretty good because the year to March 31st, the 1 year, we're up 44.2%. But remember, we had a dip the early part of last year. So it sort of tilted the performance up a little bit. But suffice to say, I think we've done incredible for our clients. I'm going to go through the holdings just briefly. I've touched on most of them already. We still have some Suncor, some oil and gas. The one thing that bugs me a little bit about the oil, particularly the heavy oil, Trump is mercurial. You don't know what he's going to do next. And he's zoned in on Canada, and I'm wondering if he might want to try to please the environmentalists by saying, I'm going to put a tax on that dirty oil coming from those tar sands. I mean, I'm trying to get ahead of where the guy thinks, but he switches every hour and a half, so you can't really work off him. But we've done very well on that. We're about 26% in that position. Kind of thinking of maybe lightening a little bit. We'll sort of play how I feel. But I'm worried about the Trump potential tax on heavy oil, even though they need it in these refineries in the New Orleans area. Commerce Bank, we've done fairly well on, quite well on. We sold a little bit. As I said, we did sell some of the banks. We have about $5 million left of that. In the gold and precious metals, we still hold Barrick, but we have Beaufield, Metanor, and Osisco, the companies that surround us in that region. And we still have, of course, Teck Corporation, which has been a big win. It's been coming off a little bit because a lot of their business is metallurgical coal, and everybody's rambling on about coal and Trump and the new premier of of BC, so that's causing a little bit of concern with that. Our big holdings, probably about 42% of the portfolio, is Bank of America, Chicago Board Option Exchange, Citigroup, Intercontinental Exchange, which is the old New York Stock Exchange, and ICE, and Morgan Stanley. So that's about $107 million worth of our portfolio, and we're up about $59 million in that position. And we have about $15 million worth of Deutsche Bank, as I mentioned earlier, because I think that's quite a bit cheaper than some of the Canadian banks. And sooner or later, Europe's going to get their ducks in a row. We have, in the private equity things, we have a company called Highview, and we had a presentation made by some of their people 2 years ago. Highview is based out of Bronte, and what they're an outsourced chief investment officer for entrepreneurs who've sold their business, have a lump of capital, and they help them to manage it. And it's a good little business. We have some loans with that company, some advances. We're going to be converting that in the not too distant future, hopefully into all equity. And we'll end up with a fair portion of that company, which we will allow the management to dilute us a little bit. But that's been a good business. Radar Capital is really where we imported through Mark Leroux and Alex Young, expertise in the private equity area. These guys are very good at due diligence, better than I was, and that's why we went and funded this company. We needed to get great, and these guys are excellent at due diligence. We still own Caldwell Financial. That was part of, we were going to buy some brokerage firms, and unfortunately, the whole area has changed quite dramatically. So that will either be a hold, build, or sell position. I don't know yet. And we own our growth ops, which was a way we could acquire more Bombay Stock Exchange. And again, we have several investments in Highview and in Radar Limited Partnerships, all of which are doing extremely well. Real Matters is going to be an interesting thing. Our cost in our investment there is about $12,200,000. That's currently worth $32 million at 5.25, and take 5.25, double it because they consolidate, so that's $10.50. So that'll add about $8 million more when they do the IPO. I don't know whether I'm allowed to say that. Don't say anything until tomorrow. But tomorrow, I think, is when the deal is going to get done. One of our investments we've really worked out extremely well is the Canadian Securities Exchange. The major shareholders of that company, ourselves and Ned Goodman, really look upon that company with almost an evangelical fervor. We think it has to be made easier for new companies to raise capital in Canada. It is so insane in costs. And I was talking to David Beatty, you know, the fellow at U of T who does governance. I said, we have a secret weapon at the CSE that I think is really going to make the difference for our company. So what's that? I said, we're going to be nice to our customers. And because the other venture capital exchange is not. And they just heap burdens on people. So this is a business that we think, we see it as something that's needed in Canada to help young people, not just mining companies, but technology companies out of Kitchener, raise some public capital. And we've tried to bring the costs down by being simple in terms of our requirements and also really helping people. And we've got some of the CSE people here. Richard Carlton, he's the CEO. He is standing. So. But that's a great investment and just great people. When we acquired that business, we were so delighted. When we went in there, we were all terribly impressed with the team that they have in place in that business. We didn't have any work to do at all. We just wrote a check, owned a piece of the thing, and then watched these guys build something really great. So that's one of our private investments that we're doing well. We have a company called Four Lakes. Four Lakes is run by a trader out of Oakville, and the guy's a really good down market trader. I'm not a good down market trader. I'm a perpetual optimist. So I need to get somebody who can trade down markets, and that's why we use him. And we're just giving a little bit of money to see how it's going to work out. Very smart young guy. We have some tag-in positions, the Minneapolis Grain Exchange. That's not going to be for too long. And Bombay, of course, we can't do anything for a year. There's one item on our sheets that drives me crazy. I won't blame our auditors for it, but that's the Bermuda Stock Exchange. Many years ago, we invested in a Bermuda stock, put in $500,000. As soon as we did it, the president of Bermuda Stock Exchange sold a major portion of Bermuda to the Toronto Stock Exchange at about a tenth of the price they sold it to us at. Now, some areas in the world, you either go to jail or you get shot for doing something like that. And I was so infuriated, it brought our $5 million investment down to $70,000, where we wrote it off. That was years and years and years ago. But I guess the new IFRS rules insist that we write it back in again. And I got tons of calls saying, why did you buy this thing for $500,000? It's now worth $71,000. Well, I said, if it makes you feel better, it was years ago it happened. So we're trying to find a bid to just wipe that off the sheet. So that's a very quick summary of the current portfolio proportion. Let me just pause for a moment here when I finish this section. 'Cause we have 2 more quick sections to do with Matthew, and then I'll come back to the company. Are there any questions at this point in this very quick review that I've given you? Is there any questions, concerns, thoughts? Yeah, and if you do have one, we have a microphone for you.
You've been buying back a lot of shares, which is
Yep.
fantastic. I'm curious as to who the sellers are and what the motivation would be for someone to allow you to buy the quantity. Like, you've bought back 5% of the stock in the last short while.
Well, we bought back, we bought back close to 40 million shares. What our goal is, by the way, because my brain works in even numbers, we have 40,400,000 A shares, 10 million common. Our goal is to get to 40 million A shares. We're going to have 400,000 more shares that we're going to buy. And then that's going to be it for the time being. And that's been we bought half the capital of the company back because we do want to build this company. I've stated before in these meetings, I want to get this company, it's $260 million, and we've already returned $100 million to shareholders. My goal is to get this company to $1 billion before I drop dead. Either I have to live to 115 or be really, really smart. So that's the goal. I mean, I know it's shallow, but that's the goal. But we've bought back, it's been from all over the place. The shareholders, this was originally an exploration type of company. So the shareholders have changed over the years from individuals to fairly sophisticated U.S. hedge funds. We got some really bright shareholders, and very, they're up to the mark, and I talk to them on a regular basis. But very often, our biggest shareholder is Horizon Kinetics. And I think what happened is as we bought back in stock, their percentage ownership went way, way up, so they had to lighten some stock. And remember, as a broker, I always one of the things I've always learned as a broker, people want to buy stocks high and they want to sell them low. That's human nature. I'm sorry it's not high enough yet. And the stock was at 80 cents, and as a broker, I called people. I couldn't get one person to buy one share at 80 cents. Now, maybe that's a comment on me as a broker. In fact, I remember I called one client, and he said he bought it at 3. He said, you call me back when it's at $3. And I said, well, 80 is probably, if we bought the same amount. And of course, it did get to 3. I called him back. He says, it's 3 now. Do you want to buy it again? I got a dial tone. But it was, a lot of it was, like Horizon Kinetics did sell. I saw in the first quarter of this year, they sold about 1.5 million shares. So some of them are readjusting their balances. Some of them have taken profits from that. A lot of institutions bought stock at 80, $1, $1.20. So they're looking at 100% plus lifts. So it's just prudent to take some profit. So it seems to be coming out of that institutional world. At least, you can't, you're buying it through brokers. You never know who the end buyer is. So it's, but some of it's come out of the U.S. as well. But we're happy with that. But we're going to do about 400 more. That's it. That's where I want to be, at 50 million for the time being. And we'll see where we go. Any other questions? Yes, sir. I go there.
I was just curious as to the scenarios under which you might consider winding down the company and getting...
There aren't any.
There are none?
Yes.
Because it seems to me that there's still a 25% discount. You've had a great run. You've bought back shares.
The world ain't over.
And you paid a dividend, and the discount is still large. You've got the IPO of Real Matters and the Bombay Stock Exchange. And
There is no scenario.
There is none?
We will not. We're going to build this company. I thought I mentioned that a minute ago. But remember, I got tremendous pressure from people. Let's liquidate this company. The asset value is $1.20, and the stock is trading at 80 cents. Wrap it up. I had really aggressive pressure. And thank God we didn't do it, because at 80 cents in 2.5 years, it's gone to $3.50. And if you do notice, the discount has narrowed in significantly. As we get results and get performance, you're going to see the discount narrowed in. But I see the discount as an investor as an advantage. For example, if I can spend $3.50 I'm just approximately, and I can get $4.70 working for me with reasonably bright management. That looks like a terrific deal to me. I mean, I would.
It's just that people should liquidate when the opportunity arises.
Well, then sell the stock.
It's likely that over the next 2 or 3 years, there will be an opportune exit point, and it'd be possible to compensate the manager for the loss of the contract and realize a good gain.
We put Urbana together for a specific purpose. The world in which we live is changing so dramatically and so fast. That's why we have an array of things we tend to get. We can do anything. There's a great advantage to that, and we have permanent capital. We can act quickly. We can take advantage of deals. You cannot raise, if you saw an opportunity, just take Urbana, 80 cents. If I couldn't get people to buy stock at 8, when the market's down, you can't. The beauty with permanent capital is I can buy low and hang on and sell high. It's a tremendous, I believe it is the most efficient way of running capital. This type of vehicle was used, and great fortunes were made from these before mutual funds existed. So, and remember, Urbana is traded at a premium on many occasions. At one point, the asset value, the last time the asset value was at $3, the stock was at $5, because we own stuff that you couldn't own. So there's a great opportunity here where you're getting really good management. I think, I'm biased, obviously. You're getting good management. You're getting more assets working for you than you invest in. Plus, you get private equity, which is really where the action is right now. You're getting private equity with instant liquidity. That is, if you're in a company, we're buying a private deal, and private deals are 5-year lock-ins. You can leave whenever you want. So we think it's a terrific vehicle that will stand the test of time. And at some point in time, I believe the discount will narrow in. I'm not going to be too vexed about it. I can narrow the discount in this afternoon. Now, I would be in jail tomorrow, but you know, it will narrow in over time. And do we have an interest in having it narrow in? Yeah, at some point, because then I can use the stock as a currency to buy other companies. But in the meantime, there's a wonderful advantage for investors to buy stock at a discount. And anytime we've had pressure to liquidate, it's been a mistake had we liquidated. So we're going to stick with it for a time being. I hope that helps you. Yes, sir.
Okay, thanks for the opportunity to ask you a question. Maybe following along the lines that you were just mentioning, to bring some more attention to Urbana, to our company, how about implementing a option strategy for selling calls, selling puts, and increase the income component and have that as a distribution, which a lot of, I'm sure you're aware. I'll leave it at that.
Well, different managers are good at different things. One of the things I've found, if I go to micro, my thinking in running a portfolio is more strategic. As I mentioned, I'll look at what's Bush going to do or what's the U.S. dollar. I start on a sort of a top-down type of approach. Options and covered writing, there are lots of people in that game now. So the margins are there, but they're not great anymore. And I don't like the idea of focusing too micro. I don't want to miss the big picture by trying to capture a premium and not wanting to sell a stock. So it can work, and it's worked well for some people. I'm not comfortable doing it with it yet because I don't think the margins are high enough, and I'm not sure that we have the real expertise we need to do it really well. That's a full-time portfolio, an enhanced portfolio. It takes a lot of expertise, spending a lot of time focused on that. I don't want to focus on that. I want to focus on a big picture move, and that seems to be working for us. So my answer is I don't know, and we may look at it later. If you got a brilliant idea, call me. We'll take a peek at it, kind of thing. So I don't know if that helps you or not. Any other questions? Yes, sir. Wait till we get a microphone, because we're taping this for posterity. Your children may want to see this. I don't know.
Thank you. Actually, I have a couple books for you to sign for them.
Oh, terrific.
Sorry, I might have missed the net asset value.
The net asset value as of
per share?
Per share. Hang on for a second. I got today's holdings list. I just got to get my papers organized here. I think it's $4.70 some odd cents today, or as of last night. Hang on for a sec. $4.75.
Yeah, that's.
Yeah.
Congratulations, you've done very well on
Well, we've
on
got
growing
great,
this company, and some of the holdings, the returns are prolific.
Well,
That's
we've
great.
got an incredible team of people. We really have, I mean, I get to take the bows, but Brendan and his team, our directors are really working directors and you know, spend time at this, and they're grossly underpaid too, frankly. So as I say, I get to take the bows, but thank you for that.
I've become a shareholder just recently, so I'm not sure, just still completing some of my due diligence, but going forward, does the company put out a press release every month on what the net asset value is sitting at?
Every week.
Okay.
We have if you go on urbanacorp.com, every week we publish basically the working sheets that I work from.
That's fantastic.
So you get that every week. But if you have any questions, email me, call me, I'll be back to you. I mean, one of the things we really try to do in this company is that I treat every shareholder of this company like I do my clients, because you've invested money with me. You have a question, you have a concern, I will respond to you right away, you know, same day, every time. And so if you have a question, phone me, call me, whatever. I will explain what we're trying to do.
It's great. Thank you.
Thank you.
Tom, I just wanted to mention that the NAV is
That's
updated
the
every
speaker.
Tuesday.
The ceiling's talking to me.
You know the
Oh, there you are.
voice.
Sorry. Okay, ceiling.
The NAV is updated every Tuesday, and it's on the homepage of the website, and it's www.urbanacorp.com.
Okay, thank you. Are there any other questions? Okay, I'm going to segue into a far more interesting part of this meeting. Matthew Stevens has worked with Beaufield, one of our neighbors in the area, and we've sort of seconded him to work with us as well on our urban township property. As I mentioned, the urban township property was a heritage property. We took it over, and we did a little bit of work, but it was too expensive, and that's when I'd converted the company into an investment company, but we still held the mining company. This is not a mining company, it's an investment company, and this is one of our investments, but we have it on the books at zero. So I always keep joking it's a lottery ticket component of our portfolio, because if we find something, it's going to really be a very positive impact. If we don't find anything, I'm not even going to mention it at the next meeting, and nobody will even know. It'll be gone. It's just not there, you know. So it's on the books at zero. So there's upside and no downside. But so you won't see it on the balance sheet at $1 or anything else. But this is an interesting property. We've been approached by several serious mining companies in the area to do a joint deal. But the problem is right now, as I've said to Matthew, I don't know the deal to do, because we got a property that might be worth zero, or it could be worth $100 or $500 million. So how do you structure a deal when you don't know what you've got to do? So I'm trying to sort of, our team, our directors, everybody, we're all working our way through that. So we'll have Matthew, if you can come and talk. We've got 3 hours to get through your presentation. They should have talked about it.
I'll try
Thanks.
to make it shorter than that. Thanks, Tom. So I got a little microphone. Is that working? Yeah? Can you hear me okay? I look like the FBI informant or something, which, by the way, is a job opening recently. So the urban projects, urban, everything's called urban in the area. Urbana obviously got the name from the urban township. I was there 5 years ago, and I can tell you 5 years ago there was nothing urban about it. But it's a changing story. Since 2 years now, with a Cisco mining in there, it's night and day. 5 years ago, you were out there was no one else. Now there's people everywhere, trucks everywhere, new camps building. If you go on Google Earth and look at the area, you'll see, like, not cities, but camps everywhere. So I'm just going to grab this. So I haven't updated the picture, but this is a picture of the Lake Tico on the Urbana property. So it's a little lake right in the middle of the property there. I'll get some new pictures for you next time there. Yeah. This is the forward-looking statements is basically, just like Tom is saying, is a lottery thing. Just to say that this is a high-risk type of business. You have something or you don't. So there's a lot of prospective statements that I'll say, but there is no guarantee basically at this point. So where we are, Urbana property is in the northwest part of Quebec, right here. And it's one of the only greenstone belts. Greenstone means basalts and different types of rocks that are usually prospective for gold. So it's one of the only greenstone belts in that area that does not have a mine on it yet. So it's this one right here. So right here we have the Val-d'Or camp, the Rouen camp, and then different camps up here. But this is one of the few ones that has yet to see a mine. Cisco Mining went in there a couple years ago, and they started staking all around the property. Cisco Mining is in the blue right here. So they acquired a bunch of claims, and then they acquired a company called Eagle Hill, which had the most advanced property in the area. And just again this morning, there was another press release from Cisco Mining to find a new zone. So it's a deposit, a gold deposit that keeps expanding and expanding. So it's looking more and more like they have something of value that will become a mine. So that creates a lot of value for everyone around there. So in blue is a Cisco with the big package of property. Red here is Bullfields. This is the company I spend most of my time on. And my part-time job here, Urbana, is right in the middle of it. The reason they're in the middle of it is the claims, or a portion of the claims, have been held since 1947. That's when the first prospectors went in there. They used to go in by either float plane or canoe, and they prospected along a lake that's here called Lake Berry and along a river called Lake Macho, and they went right to that property. And that's one of the first areas where gold was discovered, because that's where we have, one of the issues up there is there's a lot of swamp, so there's not many rock outcrops. But there's a specific part of the Urbana property that has outcrops right there. By the way, this map I keep updating every 2 months, every month. The original map was about right here, and then Cisco grabbed claims, and more companies are joining the area. The reason is it's basically one of the hottest gold plays in all of Canada right now. So it's, I swear to you, like 2 years ago, this was the map, and everything else is open ground, and that has changed now. So I keep updating this list right here as well. So just to zoom in a little bit where we are, so the Urbana property is right here in the middle. The reason the association with Beaufield is the original reason was because of the boundary area right here. It's sort of a jagged boundary, and that whole area was never really fully explored. So that's where Beaufield and Urbana sort of started working together, and how I came about to be working as well with Urbana. What I put here is you're looking at areas of recent drilling. All these little boxes is where a lot of drilling's been going on. So obviously there's the drilling that we announced some of the results yesterday with a new discovery, which on the next slide I'll show you exactly where it is. But most of the drilling around there is all around Urbana. The reason is the windfall deposit is right here. This is the big one owned by Cisco. And there's a trend going right through here, right through the Urbana property, and right down here. So Cisco announced something like 240,000 meters of drilling. To put that in perspective, we just completed about 2,400 meters. So it's 2,400 meters. So that's about 100 times more drilling from Cisco than Urbana. And then Bonterra is the other group that is drilling a lot, and then Metanor. So my point is, Urbana is the big bullseye in the middle of the camp. It's right in the middle, and everyone's finding gold all around. Here's the property outline in the red. So the discovery that was announced yesterday is right here. This is the first time that any drillings happen on that side. The river is right here. So the original showings and discovery are up here, and this is the first time that we, Urbana, went to, or anybody went to drill in this area. The reason is this kind of white background right here. That's swamp, so there's no outcrops, so no one knows really what's underneath. But we did geophysics, and we drilled on the geophysics, and that's where that little discovery is here. Now the results remaining, there's about 6 holes remaining. They're in this area right here, including the follow-up on last year's discovery, which was the fold here discovery with 20 grams over 1.1 meters. Now, as Cisco's press release this morning, they obviously have much higher grades and wider widths kind of thing, but they're also going much deeper. These holes, this is 25 meters from surface. This was also just about 30 meters from surface, so we're just skimming the surface at this point. This whole area, before we started drilling here, there was never drilled. This was the furthest drill hole south of here. Everything else, there was no drilling. So it was a big, like I was saying, a big bullseye, but it was a big bullseye that was never even explored. So this discovery that was announced this morning, yesterday, was 13 grams over 1.23 meters. So again, not super wide, but close to surface, and definitely worth following up on. And according to geophysics, it could be more important down at depth as well. There's also some copper in there, 0.8% copper. The other thing to notice is all these little bubbles here. This property, in terms of square foot, say, has the most gold occurrences in that whole camp. I mean, everywhere you go, there's a gold occurrence. It's quite remarkable. If you go back really quick, I don't know if you can see, but you see all these stars right here? And that's just the explored area. You don't have as many showings, showings in this area, like in terms of density of showings of our gold occurrences, Urbana is at the top of the list. So I won't bore you too much with the geology. I know there's a few geologists in the audience here, so if you have any questions regarding geology, regarding what we intersected, I can talk to you about after. But basically, that's the overall picture there. So, and I won't read this to you, but basically, as I said, this is areas, still, we're just skimming the surface. There's still a lot of drilling to do. What we concentrated is on the portion of the property that we can only access in the winter, because new regulations now, compared to 20 years ago, is you have to wait for ice conditions, basically, to go on wet ground so you don't mess up the terrain there. But also, this whole area here hasn't been drilled, and this is accessible. You can see the roads here. It's accessible by roads. So that, as Tom said, the whole area's changed in terms of access. Before, you had to go in by float plane or canoe down this river. Now there's forestry roads accessing the property, and there's one just off the map right here to the north. So much better access. With a Cisco working on the windfall deposit, if it becomes a mine, you can be assured that they're either going to improve the road as well. So there's going to be even better access down the road. So that's basically it for that area. Just skip. This is what we're looking at here is the magnetics. So this is airborne magnetics. What that allows you to see is you can sort of see what kind of rock formation is underneath the swamp, underneath the rivers, kind of thing. What I want to point out is this is the Urbana property right here. Here is a windfall. Here's a deposit called moss, and here's a deposit of berry. This whole area right here is in a giant shear zone that we call in geology. It's a big deformation zone. This is an area where gold occurrences are likely to concentrate. One thing about Cisco, the windfall deposit, is a shear zone, meaning a fault going north-south. Right here, you have the same thing going on. You have that major shear going right through a certain portion of the Urbana property, and a fault going right through here to the north. So this is, like I said, that big bullseye area. So the discovery that we made, we announced yesterday, is here, and then that one from last year, which we're still waiting drill results on the follow-up, we'll probably have that within the next 30 days or so. So the next steps, this is still depending on the results to come, but like I said, there's still a lot of drilling to do, a lot of exploration to do. Access is much better now. So this is something that will have to be discussed with Urbana and the directors. But it's in time, this property will only gain in value. Even if you don't do anything on it, it's just going to create value because of what people are doing around it, and there's still more to come. Also, I just mentioned you have so much money on the claims. To keep the claims in good standing, you can do nothing, and you'll keep the claims good for the next 30 years. Not that you want me to say wait that long, but you don't need to do the work if you don't need. Yeah. Well, I don't know. You mentioned that 115 years old thing. If you're still interested in that, then it's a possibility. And then lastly, just pictures from the camp. I showed this last year, but just to show it again. It's from the original exploration camp that we found on the property right here from the 1940s. So we had these nice little log camps. 1960s is pretty much all gone, and then the 1980s camp right here. Now we just bring in trailers, and we don't leave anything on the field there. But just to say, the 1940s camp, they still hold up compared to the more recent stuff. So that's basically it. Any questions? Yes?
Drilling. How much drilling are you going to be doing or expecting to do next year?
How much drilling are you expecting to do next year? How deep are you generally going? Are you going 30 meters? Are you going 300 meters? And how much is the cost going to be for the drilling?
So in terms of going forward, we're not at that point. This is still a discussion we need to have here for budgets and things like that. But in terms of drilling, like I was saying, we skimmed the surface. Now we look at Windfall, Cisco, and Metanor. They're drilling down to 600 meters, 800 meters. They even have holes down to 1,200 meters at depth, so more than a kilometer of depth here. We went down to the deepest hole was 250. So right at surface, and that discovery is at 25 meters from surface. So what the plan is to just see what's at surface first, and then as you go deeper, drilling gets more expensive, and that's the next step as you go after. So like for this discovery state, my recommendation at this point is to go back as soon as we can, drill underneath and to the side and see if it gets better with depth. In terms of Cisco's windfall, the best results seem to be around the 600-meter level. No holes that exist on the Urbana ground at that depth. Doesn't mean that's the case here, but it could be. We had an excellent deal in this case, which I'm trying to do again, but the cost of meter was just about $60 a meter. Most companies are paying $85 a meter, and that includes camp costs. So it's about half of what the other companies were paying. Any other questions? Yes.
This might be a question for Tom because it's more of a big picture, but I think a lot of investors have just been ignoring the gold kind of portion because it's not on the financials and all that. So I'm just trying to get a sense of how big could this get, and with the understanding that obviously it's very uncertain and it would just be a guess from you guys. Like, could this someday be, 10% of Urbana, 30%? I'm just trying to get a sense of the scale.
I can come back to these questions when you're.
Okay.
Why don't I come back to the bigger picture strategy and let Matthew do his first part, and then I'll come back to both the previous question and yours as well.
Well, in terms of the potential is definitely there. I mean, that's why so many companies are interested in that property. So if you can make money on it right now if you wanted. There's about probably 4 or 5 companies, I'm guessing, that are interested in acquiring this property. So if the option is available, the question is that the right course of action? That's a question for Tom, but the potential is definitely there. Questions? That's it? Okay, any other rock questions I can answer later if you wanted it later. Okay, thank you.
Thanks, Matthew. One of the things I've always enjoyed with Urbana, we got some really great people working with us, and Matthew is definitely one of them, and been just really great, and carving out deals, that as he mentioned on the drilling. If I were to look at Urbana, I still think of Urbana as an investment company, and I see this as an investment. I don't see us going into the mining business per se. What we've been trying to do is do little bits of work to improve our knowledge of the property and enhance the value of the property to some degree. There's a time when we have to say, okay, if we're going to really be in the mining business, we have to do it in a separate company, being able to raise flow-through money. It's a big event doing that. Right now, we're playing a little bit of a poker game. We know everybody's around us, and they're great companies, and we've met most of the managers of them, and they're quite keen, and we've been bouncing numbers around, 5 million, 8 million, 10 million, sort of thing. No offers or anything yet, but we don't know quite what kind of deal we do. So to come back to your question as well, as what could it be? Well, it could be 0%, or it could be 200% of our capital. We just don't know, and that makes the deal very hard to do. You can't structure something from that. So you got to figure, where do I do this trade? Where do I do the deal? So we don't have anything on paper from anybody. Everybody's sort of dancing around with all kinds of thoughts. But conceptually, what I would like to see Urbana doing is getting an obscene amount of money up front, or shares, and then have a continuing net smelter royalty on the thing. I don't want to be involved in labor negotiations, engineering, or that would be our thought process at this point. And I've told people that we have talked to, I said I have 3 conditions on a deal. Some upfront, whether it be stock or cash, and I don't know what that number is. I'd feel pretty stupid if I got $5 million, say, in stock and a net smelter royalty, and we have a major mine. And right now, I think we're the premier property in this whole play. And it turns out to be $1 billion gold mine or something. Then I'd feel really stupid, and you guys would want to lynch me. So that's number one. So I think I said, well, we want to have some money up front, preferably participation in the company of some variety. We want a net smelter royalty. I don't care if you're making money on your mining. We want a certain percentage of the gold coming out. And the third one, as I said, was an easy. I said, if there is a mine, I want it to be called the Fred A. Boylan mine, because he's the guy that originally staked these claims. And to just honor old Fred, who didn't stick around, didn't last long enough to see how it worked out. So we're still a little bit up in the air. And frankly, I can understand as shareholders why you wouldn't pay a lot of attention. We try to put notes in the statement to say, this is here, and should we attach a value? We don't quite know, because the value could be either end of a very, very wide spectrum. We just don't know where the number is. Plus, if you don't have tonnage to prove up, you can't evaluate a property. You got some gold here and some gold there and a gold there. Well, that's kind of great. You got some Rolexes all over the place, and how much is it all worth? You don't know. So we try to think, though, we are an investment company with a very wide scope of operations. We can do anything in this company, and that's the great advantage of it. And we have permanent capital to do it with. So if we see a deal that looks good, we can do it. That's where I want to be with this. So this is an investment in our company that we have, that we're going to do a deal with at some point in time. Just consider it like an IPO at some juncture. That's how my brain is today. That can change. Yes, sir. Wait a sec.
You seem to be committing more money to the area. You started now.
Yeah, we're doing about $500,000. What was this year's program? 600. We know we gave a budget of. Yeah, it's about 300, which really that's not very much for us. I mean, we can generate that in 10 minutes in our portfolio. So I don't mind spinning off a little bit of money. Now, if we're getting to $10 million or $20 million in exploration, then I think we have to find a better structure where we can do it on a tax advantage basis. We're not there yet, though. I'm going to just finish with this. Any other questions on Matthew's part? I'll just finish with this. I try to look at Urbana as a one-stop portfolio. What I mean by that, you're buying $4.70 of assets for $3.50, getting reasonable management. You have private equity with liquidity. So you can take advantage of private deals like Real Matters, but you got the liquidity to sell or buy whenever you want. Whereas Real Matters, there was a commitment, you locked up money for 5 years. It hasn't been that long. So private equity with liquidity. We have active management with liquidity as well, because we tend to trade the big caps. And believe it or not, I don't care what the Globe and Mail says or Carrick or any of these guys say, active management beats passive management. It doesn't matter. The ETFs are doing very, very well these days. You wait till that market turns south and watch what happens. So with active management, we have the flexibility to do anything. I said to Harry, can we put in our charter that we can do anything, including declare war? We want to have total flexibility to what we can do. We have permanent capital, because as Brendan will tell you, running mutual funds, when you're in the business, in our investment business, and those brokers, you always get your money at the worst time, right at the market tops. That's when the money comes into mutual funds and everything, and at the bottom, everybody's bailing out. It's human. My job is an attitude adjuster, but so for us, we have permanent capital, and that's a significant advantage. Mr. Buffett has shown us that permanent capital, because he's had many, many years of abysmal performance. But permanent capital, you can stick around and still make your passes. I think this structure has been the foundation of many large pools of capital in this country. The Jackmans, et cetera, all started with this type of structure. And we got away from it with mutual funds and now ETFs and whatever the flavor du jour is. But this is a structure that works. I want to thank our team, the directors, the people at Caldwell Investment Management, Matthew, and the companies that we own, Canadian Securities Exchange, a terrific organization. So I want to thank all the people involved. Are there any final questions for me? Because I think we've talked your ear off so far. That's great. Have a nice afternoon. Appreciate your coming. God bless.